We've all experienced and seen them before, the gaps on charts. They can be gnarly. A good thing if we're positioned in the direction of the gap. They can be really hurtful if one is positioned in the wrong direction. Most importantly though, gaps a lot of times tell a story and are important inflection points in a stock, an ETF, a commodities journey along the way. If you look at the chart here on your screen, you can see three gaps that I colored in a particular stock. The first one here over on the bottom left-hand side, you can see a stock had been consolidating, meaning not been able to break above support. Then in this case, after earnings, and a lot of times gaps happen after earnings, not always. The stock gapped higher meaningfully, breaking out and then continued on a meaningful rally, in this case about almost 30% to the upside. So taking advantage and knowing the power of the gap was important. Same thing over here. If we go to the next gap on the top here, you can see the stock ended up consolidating up here, then breaking below support, and that was kind of it. The stock then ultimately did revisit that sort of level, but then failed again until it gapped down once again, in that case again after earnings support. And now as I'm looking at this, it ended up retesting, and my best guess would be that it's going to resume back to the downside. So gaps are an important concept to understand, and to learn more about gaps, the concept of gaps, even how to day trade with the gap, there's a great trade that we like to do at the open of the trading day called Trading the Gap. To learn more about that, you can check out the Study Trader University.